morning. We will do the question on Frazier stores today. When you do the bank reconciliation, you must always remember that in the books of the business, if I have a bank account, the bank is an asset to me, so the bank will increase on the debit side and decrease on the credit side. In the books of the bank, they treat you as a creditor or a liability, so it means they will increase on the credit side and decrease on the debit side. So any entries that we record on the debit side of the bank account in our books will be recorded on the credit side of the books of the bank. So when you receive the bank statement, your debits will be equal to their credits. Okay, when you do this bank reconciliation, you must be very careful that you read properly. So this bank reconciliation was on the 28th of February 2023. We are doing the books now for March 2023. So you can't use this statement balance, the 1310. That was the balance at the end of the previous month. You must look what is the balance in the bank statement at the end of March, because we want to carry on from where the bank stopped. So the bank statement reflected a favorable bank balance of 169. Now remember, I said if it's on the credit side, it will be a favorable balance. So I will begin my bank reconciliation statement with a credit balance according to the bank statement, because they have a balance on the credit side in the bank statement. Okay, secondly, they don't give us the balance in the bank account at the beginning of the month. The previous month, you can use that information to calculate the opening balance, because then they just give you the cash receipts and cash payments journal for all the transactions that was already recorded. So if I want to see what was my opening balance, this is a favorable balance. So favorable is on the credit side, the 1310. A deposit in the bank's books will be on the credit side, 242. And there was an outstanding EFT that would appear on the debit side. And then by balancing, I could calculate what is my bank balance, and that gave me a balance of 1101. Now remember, that balance will be brought down on the credit side, 1101. So that means in my bank account, I will start with a balance of 1011 on the credit side, because the credit side was bigger than the debit side. Okay, so if we look at the information that they gave us on the cash receipts journal, they don't give us the bank total. So you must think, what do you do in the cash receipts journal? When you receive money, the money that you put in the bank will also appear in a different column. So that means if I want to calculate the bank balance, I will take the sales, 1950. Cost of sales is not included in the bank, so you ignore the cost of sales. Then the debtors control. How do I get the amount in debtors control? I take the amount that I received in the bank plus the discount, and that gives me the debtors control. So if I write down the 505, I must deduct the 5 Rand discount, because that 5 Rand is not included in the bank column, and I would add the 100 Rand. And that will again give me a total of 2550. So it means that I will show in my bank account that the total receipts will be the amount that we calculated now, plus what is in the cash payments. We will record the additional entries, and then we will take it to our bank account. If we look at the cash payments journal, there again, you have to calculate the bank. So it means I take the trading stock plus the stationery plus the creditor's amount, because that's money that I paid out. Again, I took the amount in the bank plus the discount to work out the amount in creditor's control. So it means I must subtract the discount. Then the wages I add and the 62 I add, and that will give me the 3662. So that's my opening balances of all the transactions that was already recorded during the month. Okay, then when we look at the rest of the information, they say that comparing the journals with the bank statement, the following differences were noted. There was interest on current account in the bank statement. Now, interest on current account means that we received money. So I will show that interest on the debit side in my books to show that the money in the bank increased. The service fees is bank charges, and I will credit that with the 54 rand. A deposit of 242 and an EFT for 451 outstanding on the 28th of February appears on the bank statement on the 1st of March. Now, what did we do the end of February? We said that the bank still had to record a deposit of 242, and that is what they did now. So we recorded that during the previous month, and they still had to record an EFT for 451. So they've done now what we recorded at the end of the previous month and what they still had to do after we received the previous bank statement. An EFT for 586 by debtor does not appear on the bank statement. So it means that we already recorded that EFT when the debtor paid us, but the bank must still do it. So this is money going into the bank. In the bank, when they receive money, it will appear on the credit side. So I will show the 586 on the credit side of my bank reconciliation statement, and I will show that that is credit outstanding deposit. So the bank will record this deposit at the beginning of the next month. Okay, debit card purchase for stationery was entered in the cash payments journal as 159 instead of 195. The correct amount, 195, appeared on the bank statement. So the bank didn't make a mistake, we made a mistake. Okay, we used our debit card to purchase the stationery, so it's money going out of our bank. The bank immediately paid the money over to the business where we bought the stationery, and it means that because of that direct link, this is cash purchases. So this money must still be done by the bank. So on the bank statement, you will show that the bank must still record this 159. Okay, the 159, 196, if I subtract that from each other, I get a difference of 36 rand. So that means I must record that 36 rand in my books now. It was a payment, so it was on the cash payment side. The amount that we recorded was too low, so it means that we have to increase the amount on the credit side. So I will show on the credit side that more money went out of the bank than what I originally recorded. Okay, an EFT to a creditor, Crane Stores, for 250 in settlement of a debt of 260 has not yet been recorded in the journals. This is a payment that we made, so the bank must be credited with this amount. Although we will decrease the creditor with 260, only 250 will appear in the bank. The other 10 rand will appear in your discount. So it means I will show that there is a payment of 250 that were not recorded. Okay, the bank statement showed a debit order in favor of Nasher for $280 for cell phone expenses. Okay, so a debit order is what we sign at Nasher, and they can collect the money from the bank every month, and this amount will not be a fixed amount. It will change from month to month. If this was a stop order, then we signed it at the bank, and the amount will remain the same each month, and the bank will pay out that money each month. We haven't recorded this debit order, so we will show that 280 will be recorded in the cash payments journal to decrease the amount of money that we have. Okay, a debit card payment of $920 for printed cartridge does not appear on the bank statement. So the bank must still record this entry. That is a payment, so it will go on the debit side of your bank reconciliation to indicate that the bank must still do this transaction at the beginning of the next month. So you will either show, if it's an EFT, that it's an outstanding EFT, or you will show it as a debit card payment. The debit card payment of $450 received from skills traders was correctly recorded in the cash receipts journal, but in the bank statement it was recorded as 405. The bank was requested to rectify this mistake. Okay, so here the bank made a mistake, so the correction must be done on the bank reconciliation. The debit card payment was received, so it means it's money that we received, and they had to record it on the credit side. Now the total amount was 450. They only recorded 405, so additional 45 Rand must be recorded on the credit side, and the bank will have to credit the mistake to rectify the mistake so that the books will be correct. The tenant deposited their March rent directly into the bank. Okay, so that was at the end of the previous month before we received the bank statement. So it's money that was paid into our bank account. So we will show that there's 500 Rand that was paid into the bank. So my cash receipts journal, I had to debit with 500 Rand. Okay, so we've recorded all the entries now. Then I have to take the cash receipts journal and add up to see what is the total amount that we received. And I will take the cash payments. Remember the amounts that was given to you that was recorded during the month, plus the additional amounts, and that will give me 4282. Okay. In the bank account, we calculated that this balance is 1101. There was receipts of 3061, and there was payments of 4282. Okay, so that means that my payments was more than my receipts, so there was a negative balance of 120. Okay, now the entry for the 120 will appear in your bank reconciliation on the side of the ledger account where the balance was brought down. So if I did a normal T account here, I would show that the balance at the beginning of the month was 1101. We added the 3061, subtracted the 4282. The credit side is bigger, so that gave me a balance of 120 that was brought down on the credit side. So on the side that the balance is brought down, on that side you will record it in your bank reconciliation statement. And I will show credit balance according to bank account. And if I add up now, the debit side and the credit side must have the same totals. If the totals are not the same, it means that I made a mistake somewhere. Okay, what's very important when you do this, where you quite often make mistakes, is that you put the balances on the incorrect side. So remember, all these entries that the bank must still record, so those entries where they make mistakes or omitted certain transactions, that will be done on the side that the bank will do it. So they will show the deposits on the credit side, and they will show the payments on the debit side. But the credit balance, according to the bank statement, you will put on the side of the bank balance. So if they show you that they've got a favorable balance at the end of the month, it's a credit balance. The same with a bank account balance. It means that if the balance was brought down on the debit side, the 120, you will show the balance on the debit side. So it means that the inside the reconciliation, where they have to complete additional entries, you will put it on the side that the bank will do it. But the balances will remain on the side that they appear in the bank statement or in the bank account.